Yeah, we'll get to that as well. The other one is Godrej Properties. Look at that, 10% surge right now. And that, just to recap, as Rima was earlier telling us, 135% jump in bookings in Q4, and the guidance for FY25 is bookings of 27,000 crore rupees, and the market has really loved that commentary. Let's get more perspective going with Sonal. Sonal, so it's been a strong year, and they're guiding for more strength?
They are, and that is what we analyzed on Friday, because numbers were out on Friday during market hours, and post that the management sounded very bullish as well, because of which brokerages are sounding very bullish on the stock as well. Let's start with Jefferies, where they have a buy call with a target price of 3,175 rupees a share. The strong cash flow performance is what drove this reduction in debt this time around, and that is what the street seems to like as well. The FY24 guidance has been well exceeded by around 61%, and disclosures on embedded profitability imply that the company trades at 17 times PE to FY25 pre-sales. JPMorgan has upgraded the stock to an overweight. They have increased the target to 3,100 rupees per share. They have upgraded it following company's FY24 beat in terms of pre-sales, and also following disclosures that its economic interest in new sales have increased substantially. The sales have grown 3 times in last 3 years itself, and Mumbai sale growth is an added positive as the company is finally capitalizing the home market opportunity, and they see this as a big growth trigger going forward as well. Motilal Oswal says that they believe the company will continue to surprise in growth, cash flows and margins as well. They also have gone ahead and upped their target to 3,000 rupees a share. They have a buy rating on the stock as well. In fact, we spoke to the management earlier today. Let's listen into what they had to say.
Well, yes, 3 times in 3 years on this larger base might be challenging, but I wouldn't put it, totally out of the realm of possibility. But of course, execution on this higher base will be much tougher. And we have to be aware that, this cycle may change, at least in some markets. So I think we have to be ready for all possibilities, and certainly sustaining the kind of growth rates we've seen in the recent past on this higher base will be challenging. But overall, we've guided that through the cycles, we would expect kind of 20% growth rates. And certainly we'd like to see at least that. Say NCR and Bangalore, those 2 markets, I think, have seen the most pricing growth over the last 1 or 2 years, as compared to somewhere like Maharashtra, where I think Mumbai and Pune have not seen the same kind of pricing growth. So it wouldn't surprise me if you saw kind of more moderate growth in NCR and Bangalore for a while, and you saw Maharashtra catching up a little bit. We are very confident that operating cash flows will grow rapidly. You mentioned the growth rate in bookings, but our operating cash flow growth rate over the last 4 years has been even faster.
All right, let's get a view on